Hi and welcome to Market Conversations. Just want to do a quick video on Alibaba and give you some option strategies that you guys can implement on this stock. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Also, if you are holding onto Alibaba, please give me a thumbs up. I'm trying to reach my goal of making at least $1 a day on YouTube. It's been a tough year for Chinese investors, so let's try to help each other out. Also, I do have a Discord where I post my watch list, and then we also other analysts on here that post their watch list as well. These were some of the watch lists from last week. KWEB, JD, Baidu, these are all Chinese stocks. So if you guys are interested in sharing ideas, definitely come check us out. So if we take a quick look at a 1-year chart, the stock has not been doing well. Hit a high of 274 back in February and then slowly sold off, reaching a low of 108. We had tried to break above 125 for a very long time, and we finally did. We did hit a high of 138 last week, so we're hoping that we can break that resistance again in the next couple of weeks. Take a look at the news here. It says Alibaba surges as interest rate cut in China fuels broad rally. I did make this video yesterday, said breaking news. This was 10 hours ago, only 147 views. And then we also have other Chinese stocks that are currently up, such as Pinduoduo. That's up 4 points. And then we have Baidu. These will continue to go back up, probably not to all-time highs, but I do see Alibaba going to at least 160. Filling this gap, we did see the stock drop from a high of 160 all the way to a low of 140, and this was after earnings. So if they have good earnings this time around, it will probably fill the gap. Alibaba is currently at 135.75 right now. So we'll go ahead and take a quick look at some option strategies. If you are bullish on the stock and if you think it's going to continue to go up, what you can do is sell cash secure puts, receive the premium, and use that premium to actually buy shares of Alibaba, or possibly get the shares at a discounted price. So we're going to go ahead and go to February 18th. You do need to have the collateral, and the collateral is 100 times the strike price. So let's say if you were to sell a cash secure put 120 strike price, you would need $12,000. I know this can be costly for small accounts, so I'm going to go ahead and show you what you can do then. So but in this case, if you were to sell 120 strike price, receive $435. And as long as Alibaba is above 120, you will receive the collateral back plus the premium that you can use on anything you want, buying shares of Alibaba or treating yourself to a nice meal. So let's say you do not have the collateral. What you can do then is you can buy a long put right below it. So we're going to go and choose 115 put. Now you're looking at $137 in premium, but you now only need $500 in collateral. And I got that from subtracting the difference in the strikes. 120, 115, that's 5 wide. So it's 5 times 100, still $500 in collateral. So we'll take a quick look. Break-even price is at 118. Your max profit is 137. Your max loss is 363. This is great if you think that the stock is going to continue to go up, but you don't have enough money to sell cash secure puts or to buy shares. Another strategy, it is called the call debit spread. I do have some of these portfolio, so we're going to go ahead and go further out in time. So let's say in September. This is what I currently have. Let's say you think that the stock is going to go to at least 150 in the next 6 months. What you can do is you can buy the 150 call, and then you can sell the 155 call. You're looking at $148. So now instead of receiving the premium, you will pay a debit. So you're going to pay $148 to potentially make a max profit of $352. No, it's not a lot of money, but if you're trying to build up a very small portfolio by buying Alibaba, this is definitely the way to go. You want to go further out in time so that way the stock can move up in your favor. This is how I was able to make money from ATVI by buying leap call debit spreads. You will still make money if the stock goes up. Take a quick look at my positions. I do have some put credit spreads. So this is one wide. I only needed $100 in collateral. I'm going to go ahead and close this out since it will be max profit since the stock has gone up tremendously. Next, we have some put debit spread that expires in February. These are 130, 135. I'm currently up $200 from yesterday, but these will go up today. And then we have some call debit spread 190, 200. And then some call debit spread. These are leaps 170, 175. So these are all great strategies that you guys can implement into your trades. But of course, the best way is to buy shares. But like I said, if you don't have money to buy shares or sell cash secure puts, these are some other strategies that you guys can implement. So that's all I wanted to share. Let me know what you think of Alibaba. And do you think we're going to hit 160 this year? And also, hope to see you in the Discord.
We're increasing our position in Alibaba. I did a call last night with head of IR and pretty impressed in terms of how they're navigating some of the macro headwinds. But again, based on valuations and the earnings outlook, we see that it's a buying opportunity. And another thing that's really interesting is relative to, say, the US, you look at the NASDAQ market, S&P hitting all those all-time highs, etc. Asia is looking relatively undervalued. And so there might be a bit of maybe a rotation away from DM into EM, as we're seeing China probably more at a mid-cycle in terms of its loosening, and the US taking those hawkish comments last night. But their chairman, it seems like they're at the beginning of the tightening cycle. So a lot to digest at the moment.
Some other risks, you mentioned tensions between the United States and China, and you fear that those might escalate in 2022, I should say. How do you trade that then if we are going to have, again, this tit for tat between these two superpowers? Then you've already given some of your recommendations on the consumer side, but we know that when it comes to tech, the United States has been taking aim, as has China, at some of those tech names. How do you, I guess, hedge yourself against increased tensions between the US and China?
I'm sitting here hoping to be an optimist, and there's one area in particular which I think may be divorced from the conversation. If you bring back China's document, the new measures, new goals for national determined contributions, focusing on renewable energies, their long-term target, their peak emission type goals, etc. I would like to see China and the US work together on that. That's something that would be mutually beneficial for the globe. When it comes to other things like protectionism and putting in place bans in terms of 5G, national sort of security type areas, I think that's going to continue. What I don't want to see is the US getting too perverse and then banning US investors and investing in Chinese stocks, whilst there's been a little bit of a blacklist there growing. If there was anything more that comes in a blanket form, would be really worrying. At the end of the day, I think there's opportunities in there. To answer your question, Matt, there's businesses like CICC, which is the leading investment bank in China. It's got a very strong equity capitals market. So as those stocks are delisting or essentially looking for a new listing in Hong Kong in particular, they're obviously benefiting from that with the new listings and the trading volume thereafter. It looks like a black box. There's risks there, a lot of idiosyncratic risks as well to some of the companies which were in the sort of like the line of fire, but nonetheless, there's also opportunities there, such as renewable energy and some impact stocks that we like as well.